Now to Cape Town, where we're speaking to Marc Edwards. He's the Chief Executive of Tower Property Fund, and he joins us to discuss how his company's full year results. Marc, good morning and lovely to have you on the show. If we're looking at these numbers, they all look rather impressive. A portfolio value increase of 25%. You've reduced your vacancies by 19%. Your net asset value has also increased, seemingly good numbers. Maybe talk to us a little bit about what it's been like to achieve these numbers in the operating environment that you're in right now.
Thanks very much. Thanks for having me. Firstly, just a big congratulations to Alexander Forbes. A year ago, Tower listed, and I blew the horn, and it's a wonderful experience. Yeah, it's been a very good year for Tower, a strong year in a fairly volatile market with interest rates increasing. We've managed to settle our portfolio down, expand it and grow it by 25% in terms of new acquisitions, reduce our vacancies to 8.2% now. So it's been a strong year, and we've fortunately exceeded expectations in terms of our first annual distribution.
Marc, interesting you mentioned Alexander Forbes. We saw Edward there blowing the horn. He certainly took a lot of blows at it. He's got a lot of breath, and we hope he recovers before he comes into the studio. But as a listed company, you mentioned that it was a year ago that you listed, and we recall that too. What difference has it made to you being listed? What have you been able to do, and what have you achieved that perhaps you wouldn't have achieved if you hadn't gone onto the market?
David, it's a significant difference. Firstly, access to capital is obviously a lot easier. Secondly, your public profile becomes prominent. So we're very big onto the greening side of properties, and we put occupancy cost reduction as our first and foremost flag, if you like. So when we're taking it to our public investors, a lot of the institutions are supporting green initiatives, clean energy, reduced operating costs. So for us, it's been fantastic to be listed. Also, the access to capital. There's been significant inflows into the listed property sector. They continue to be, despite the interest rates going up recently. So for us, it's a game changer to be listed or not.
Marc, of course, we also see that in your results, you make mention of the greening program at Cape Coast and how that's been a success. Let's talk about what's next. Where are we likely to see you make your mark next, and where do you see growth coming from?
Thanks. We intend rolling that greening program out to all the properties on a cost-effective basis. We're looking at solar initiatives now at Cape Quarter as well. The idea being to reduce occupancy costs across the board and make properties more attractive. In terms of growth, there are opportunities within South Africa. We're looking to put 10% of our portfolio aside for new developments and smaller developments. We believe that convenience retail, smaller retail shopping centres of around 10,000 square meters are the right defensive play for us at the moment. So you can certainly look to see us increasing that side of our portfolio. We also like, against the market, we like smaller offices, decentralized offices, particularly in Gauteng, where e-tolling is starting to have a cost effect on people commuting to the bigger nodes like Sandton and Rosebank. And we've seen reduced vacancies in our outlying properties. So we'll look to expand the portfolio continuously. We've got a portfolio under negotiation of about R1 billion at the moment, which is our short-term plan, and we'll see where to from there.
Marc, just to get back to the greening issue, which is obviously important to you, and we've had a discussion earlier this week with the Green Building Council. It's become part of doing business in the property sector. Obviously, older buildings, there's an issue there. In terms of the costs and the benefits, are you able to quantify that now and really demonstrate to people that not only is this the way to go, but it's an asset to the business?
Yeah, I think very interestingly, there is a financial case for green building. I mean, the green building financial case in terms of new developments has been proved, and the big funds like Growthpoint, Redefine, you see all the developments in Sandton, they certainly are Green Star rated properties. Where there's a massive opportunity in this country is to increase the greening of existing properties. And we're very chuffed to have Cape Quarter as a pilot project for the Green Building Council's existing building performance tool, which basically takes an existing property and benchmarks the way you can green it. So as a practical financial example, at Cape Quarter, we've implemented a lighting retrofit and a extraction fan retrofit, which through real obvious low-hanging fruit initiatives is reducing operating costs by about R1 million a year, which gives about a 1-year payback period. So you can certainly see property funds moving that way, and I think it'll be an investment criteria going forward. The potential greening, or at least the potential reduction in operating costs of properties, will be determined whether funds buy them or not.
Marc, thank you so much for making the time, and congratulations on a very lovely looking results or numbers. That was Marc Edwards. He's the Chief Executive of Tower Property Fund.